Okay, welcome everybody to this issue of Update. I am Rick Geiler with SilverSide Insurance Marketing. I'm going to get into a little bit about the environment we see ourselves in the economy and the life and annuity business, and then I am going to pose some questions. So let's get started here. In the news, we see more of the same, to be blunt. We see interest rates 1.6% on a 10-year government note, and that's actually back up. A week or so ago that dipped below 1.5. We've been consistently at all-time lows for the last several months here, and as we can see, the backdrop on this 1.6 40-year average is over 4%. So right now that is just an overwhelming factor. The 1.6% interest rate is really overwhelming about everything we see in the financial world today. Then we move down, we take a look here at the S&P 500. More of the same there too. Recently, I think this is today's close, 1308, back down a little bit, but basically we've been up and down since 2000. We broke through 1500 on the S&P. We were back in that range in 2007. We dipped down into the 700-800 range a couple times in 2002 and 2009. We were back over 1400 again earlier this year. So really we see a lot of volatility in the equity markets, but we don't see a lot of direction over the last decade to maybe 15 years. You could make that claim. So we're all over the board there. And we'll move on a little bit too. Rasmussen Consumer Index, that's just one measure, 13% in the public feel the economy is good or excellent. Now we are left to assume that 80-something% feel like it's a lot worse than that. We see one-year CD yield, 0.32%, again, an all-time low. That's from bankrate.com today. In the life and annuity business, LTC carriers, we've seen a laundry list of carriers leaving the LTC business outright, and the ones that are sticking around, most of them are raising premiums, some of them up to 90%. We saw from Hancock recently. And then, of course, being life and annuity producers, especially on the annuity side of the business, with those low interest rates, the carriers have less to work with. They invest heavily in those government securities, and as those rates go down, they have less to work with. So we're seeing commission almost daily in that end of our business. So with that, I'm going to ask a question here. What if you could actually take advantage of these conditions? And what if you could make more sales than ever? What if you could do it more with existing clients and referrals than ever before? You're going to say, Rick, how's this possible? You just painted a pretty grim picture of the economy in general. You didn't even get into the $15 trillion federal deficit and a lot of those problems. How can we possibly come out ahead as life and annuity agents given that environment? Well, let's talk about it a little bit here. Let's first take a look at some of the advantages of annuities. In black up top here, some of the traditional ones, some of them we all know: tax deferral, planning advantages, we have some fixed crediting. In the fixed index market, we take advantage of ratcheting effect, those ups and downs in the market that we've seen over the last decade. They may not be really trending anywhere, but we've all gotten some good crediting by some of the ratcheting on our fixed index products. So we all know about those. What else? Well, let's think about it. Life and annuity carriers are massive entities. They have actuaries. They have bean counters and pricing experts. And they know how to use the advantage and leverage of pooled risk to offer features that might otherwise be too expensive without that size and expertise. They can still offer vested bonuses on some of the fixed index products, not as high as what they were back when bond rates were at 4 or 5%, but they still offer some good vested bonuses. They offer lifetime income features by pooling risk amongst a mass of clients, some of whom might trigger a lifetime income benefit, others won't. If they price it on the aggregate, they can offer everybody the benefit, knowing that not everybody's necessarily going to take advantage of it. And now more and more we're seeing annuities with illness benefits, similar to income benefits, but illness and care rider benefits. We're seeing more and more of that. And again, if everybody took them, they wouldn't be able to offer them. But on the aggregate, pooling risk amongst thousands of clients, they can offer extra benefits. And now we're also seeing designs taking advantage of the PPA, the Pension Protection Act, that offers tax-free withdrawals from specially designated annuities. That's a long story, but we can get into that later. Anyway, let's move on here real quick to some of the advantages of life insurance. Well, we've all known about what the core reason for life insurance in our minds is generally to protect our family, to protect our business, wealth transfer. In particular cases, some UL and whole life designs you can use to save and plan and build cash value if you're clever. So we all know about those, but more and more what we're seeing in life insurance is leveraging for health and illness. We're seeing care riders, illness benefits, those kinds of things on life insurance. Once again, offering extra value through pooled risk, and particularly on life insurance, we see a lot of tax advantages. So the current economic environment is driving rates lower and volatility staying higher. But if we cleverly use the life and annuity products that are out on the market today, we can increase our income. And what we're calling some of this is asset-based care. Not so much on the income rider products, but on the life and annuity products with what we call linked benefits. Care riders, illness riders, those kinds of things we call asset-based care, ABC. And you could say, well, Rick, that's well and good, but I'm not an expert. I really don't know a lot about that, or that sounds like a lot of effort, or that sounds like a lot of trouble that I could get into and hopefully not get my clients into. So what do I do? Well, we at SilverSide are experts in linked benefits and asset-based care. So what you need to do is ask us for our ABC Fact Finder. It's a one-page piece you can use with your client, your prospect, whatever the case may be, and you can gather basic information about what their situation is, what resources they have available, what their family obligations might be, what their health situation might be, and ultimately what they want to see happen, what is most important to them with their assets and with their planning. So call us. There's numbers on the screen there, 480-998-1286 or info@silversideinsurance.com. We'd be happy to provide you with our ABC Fact Finder, and we can use that as a tool to help you plan to maximize your clients' benefits and your sales in this tough environment. So thank you for being with me today. Once again, this is Rick Geiler, SilverSide Insurance Marketing. Take care.